we're actually going to start seeing the prices truly impact all levels of the economy.
Welcome to another episode between Dollars and Dreams here on our podcast. I'm in the hosting seat today where I belong. That's right. I'm on the right because also that's where I belong. All right.
We won't go there.
We are here because a big week is coming up.
Mm-hmm.
Bank earnings are coming up.
Mm-hmm.
Nvidia earnings are coming up.
Mm-hmm.
Amazon earnings are coming up.
Mm-hmm.
Stock market pulled back a couple days and now it's back up again.
Yeah.
So we have always said, don't
Mhm.
time the market.
Exactly.
Right? But what do you expect? And the market is going up because there is an anticipation that the US might cut rates.
Mm-hmm.
Now, what do you expect earnings to look like for our financial institutions in Canada?
Looking good, but there's some pullback, right? Whereby I anticipate that their loan loss provisions should be
I'm thinking that's going to go up.
should go up, but
Yeah.
their earnings, the sales should be on par to what analysts are expecting. But just like any prudent advisor, any prudent CEO, you have to take into consideration having an emergency fund just in case those bad tariffs come back to haunt us. So they're going to have to put some money aside just in case it means that some Canadians will lose their jobs and won't be able to pay their mortgages.
And I know they said like inflation cool on certain things, not major parts. But there are certain items definitely you can see the impact of the tariffs already. I went to get a Cadbury the other day, and it's already a 50 cents to $1 higher.
Chocolate bar,
right? So that is interesting to see that we're already feeling the effects when we said that maybe we're going to see it closer to Halloween, but maybe this is Halloween stuff.
Well, we're getting closer, right? So the fall semester is not so far from now, whereby we're actually going to start seeing the prices truly impact all levels of the economy, because what has happened is that in the early part, when the tariff took place, the producers or the companies would absorb, right? So instead of passing on that 25% increase due to the tariffs, the company basically lost 25%. They didn't increase prices. But now they realize, we can't do this forever. We've been doing this for about 6 months. We've got to pass on these costs back to, or at least not all the costs, to the consumers. So we're going to start to see prices going up.
I think I saw today that Trump and Carney they've been meeting after the meeting in Alaska.
After hours.
So maybe there's something brewing that maybe we can see results where prices might be coming down, hopefully.
But here's the thing, and I think a lot of Canadians are have that misconception about inflation, whereby they're actually thinking deflation is going to happen, where prices go down. No, inflation is here to stay. And in any good capitalist society, it's not a bad thing for prices to go up. It's just that we don't want it to go up at too fast of a pace.
Outpacing wages.
Exactly. Back in the day, the Bank of Canada, even under Carney, wanted inflation to be anywhere between, I should do it this way, between 1% and 3%. And then they kind of went in the middle. As long as prices were amongst the 2%, that's okay. So it's just because we saw inflation go above the 3% range, that's where, we were alarmed. But we're back to between 1 to 3, at least not core inflation. But as long as it stays there, don't think that the car that you're buying last week for $50,000, next week it's going to be 45, or next year it's going to be 45. No. It just means that it won't rise as quickly as it once was. So prices going up will continue to go up.
Right. And I think, I started to talk about the bank stocks, and regardless of what the earnings might look like for the top 5 or top 6 banks, we can expect that we're going to get dividends anyway.
That is correct.
Right? So if you are a dividend investor, whether you invest now or after the earnings, you're still going to most likely get the dividends, but depending on the timing when you buy the shares.
Yeah.
But the banks have always been that type of investment.
Oh, big time. I mean, Bank of Montreal, and they haven't missed a dividend payment since the 1880s. And no, I wasn't around in 1880
You were
to
around
see it.
before that.
Yeah, I was there during Confederation, right? When Canada was first created. I was around. But so you could expect, like you said, that, good times, bad times, that banks are going to pay their dividends. So it's still a good investment.
Yeah. And, things are, in terms of the labor market, the housing market, things are still topsy-turvy, kind of up and down. So, it's the things that are important, and it's like a checklist that you will want to have at this moment in time, is always ensure that you have that plan in place, that budget in place,
Definitely.
your savings in place.
Yeah, because you're right. Whatever plans that the government is going to do, it's to spur the economy. You may be to the left, you may be to the right, but what they're trying to do, any government, is what they're trying to do is spur the economy, create jobs for us, so that we could continue on spending. And the big thing that they're also working on is to work in terms of stimulating the housing. Now, you could disagree on the strategies for housing, but note that they're working diligently to spur on the housing starts, housing activity. So what you could do as a investor or as a Canadian looking to buy a house is get ready, right? So start saving, start taking advantage of some strategies, so that once the government has implemented what they plan to implement to spur the housing economy, you're ready to pounce and get that first home. So there are some good times ahead. It's not just doom and gloom. Tariffs, we'll learn how to live with it. We'll learn how to live with that.
We learn things change post-COVID. And just like post-tariffs, we're going to learn to deal with it.
Exactly.
Right? And we just have to adapt and
be ready.
And
for the opportunity.
And I think now more than ever is the need to have a financial planner, financial advisor working with you, right? So that's why we're here, because we recognize that there's an importance for people to know about these things, and hopefully that our message is resonating with our viewers, so that they know that and recognize that this here is the time that you need to work, because with there's so much uncertainty, what is certain is that we will be here
exactly
through that plan.
God willing, yes, we will.
That is right. And
We
if
will
you go,
be
I'll
here.
be here.
Yeah.
All right.
Is there something that you want?
There's something brewing, and it's not only the coffee here. But we're recording this video prior to it being aired. What's your prediction on the rate?
Well, you know what? If we're going to the U.S. with the Fed, he's under pressure from
the president.
From the president. Powell's under pressure. So I anticipate that he will probably cut interest rates. Right?
Does that mean Canada follow?
Then I think Canada will follow to have a quarter of a percent. But if it's not this round, you could definitely expect, if it's not this time, the next time that the Fed in the U.S. or the Bank of Canada meet, that they should start to ease on interest rate.
So you heard it from the pundit's mouth. I wasn't going to say the other. All right. So there you go. That might be an indication.
Yeah. So get ready now.
Get ready now, right? We had a very, very challenging week. If you were an Air Canada passenger, hopefully everything will be resolved in time, so that we can all take our vacation in the fall.
Some of us have money taking vacation and going to Guyana.
That's right.
While the rest of us are, staying put at home.
That's right. Go to the tropics and enjoy the coconut water and sunshine.
Well, if I don't see you, enjoy your time with with family in Guyana. That makes it 2 in a row. Florida, Guyana?
Where to
Where,
next?
where are you going next? Wherever Air Canada goes?
Wherever Air Canada is not going, that's where we're going. All right. Thank you for watching today. Like, subscribe, share, and we'll bring you a brand new episode in a new week. Take care. Bye-bye.